Hello everyone, happy holidays and Merry Christmas. Today we are going to talk about a very interesting company I did not know anything about until 2 weeks ago. This company is JFrog, ticker symbol FROG or Frog. It is a high growth company that works with huge and excellent companies such as Amazon, Slack, Google and more. So today I will talk about what JFrog is, what exactly they do, their business model, analyze their financials, talk about their potential opportunity and more. If you're new to my channel, please consider subscribing and smashing that like button since it really helps my channel out. And also remember, I have a completely free Discord group chat with the link for that is down in the description below. I do have to say that I had to do a ton of research to understand what this company does, since every cloud-based company offers different services with very complex ways of explaining exactly what they do. So I would like to know if you have heard of this company before, what you think about it, and if you have invested in it before. So basically, JFrog provides tools for software companies to enable delivery of software faster updates on any system. In other words, they are the ones that help companies release new software updates within days to be able to innovate and improve any glitch their previous software could have. They have been able to revolutionize the time it used to take companies to have new software from months to days, which is very necessary nowadays with how fast technology evolves. And that is very important for us and for any company. Why? Well, as technology evolves, threats within softwares evolve really fast as well and are getting better and smarter every single day. We do not want to wait until we get attacked to then wait until the company decides to update the software for any of our devices. To be honest, that is something I did not understand nor did before. I used to think, kind of still do, that if I update any of my Apple products, it would damage the device and it would slow it down, which might be true. But one day at an Apple store, one of the guys that worked there explained me that maybe the software that I had was not protecting my phone or my computer for any new threat that has evolved, and they were not going to be able to solve that. And the only way to protect myself, my devices, and my personal information was by updating the software. Obviously, at the moment, I just thought that that was a strategy to make me change my device ever so often. And after reading about this company, completely understand what he was saying. Today's software might be protecting you and your personal information from a specific threat that might evolve with time. And if it takes a company 6 months or more to update a software, we would be very vulnerable. Or another example that I'm sure we all have experienced, you get a new phone with the latest software that was released weeks ago and you find some glitches that bothers you a lot and the company needs to fix it ASAP, but they take months and months to update a software and solve those glitches. Will you feel comfortable with those glitches for so long, or would you prefer them to release a new software update as soon as possible? Well, JFrog is the one that helps companies solve those problems and release new updates really fast, and they call these liquid software since it flows really fast, and that is why this company is very important nowadays. There is a $22 billion addressable market for them. They had a 136% of net dollar retention rate in Q3 and have over 5,800 clients such as Google, Amazon, Netflix, Slack, Microsoft, some big banks such as Bank of America, American Express and more. So all this company depends on JFrog to be able to update and release software updates faster than ever. Now, they just went public this year, and as every IPO, it got hyped at the beginning. They were supposed to go public with a stock price of $34 per share, and then they raised it to $39 to $41 per share, and it ended agreeing to open at $44 per share, but on the IPO date, it opened at $71 per share, and it is now currently trading at $68.82 per share and has a market cap of $6.28 billion. They have had an excellent revenue growth year over year and quarter over quarter. Last quarter, they reported a revenue of $38.9 million, which is a revenue growth of 40% from the same period last year. Now, this is something I love. Look at their cost of revenue. It was only $7.2 million. They invested $7.2 to make $38.9 million. That is only 18% of the revenue, which is excellent for such a growth company. Then obviously after their huge research and development, sales and marketing and other expenses, they report a net loss of $5.2 million. In a 9-month period, their net loss has not grown that much, even though the revenue has, meaning that they are improving how they are managing their money. Now, on their balance sheet, they have $324 million in cash and cash equivalents, which massively grew from December 2019. Have total assets of $654 million and total liabilities of $107.6 million, which is excellent. Obviously, their cash position increased this year that much since they collected $397 million during their IPO date. JFrog is having excellent and very attractive revenue growth, an excellent gross margin, and is capital efficient. They are more of a typical software business with huge growth margin and super healthy company. Something I really liked about them is that apparently, according to their CEO, their clients have come to them and they have not needed to go door knocking to find clients, meaning that these huge companies such as Microsoft and Amazon have noticed how JFrog could help their company and have approached them to start using their services. Obviously, they are not the only company in the field, since they compete with Sonatype, Red Hat, GitHub, and more. As always, this is a huge market in which I think there is more than enough room for competitors and more than enough room to continue growing and expanding as a company. They ended the quarter with 313 customers with ARR, or annual returning revenue, of over $100,000 and 9 customers with an ARR of over $1 million. Again, their net dollars retention for the trailing 4 quarters was 136%. The net dollar retention tells us what percentage of revenue from current customers the company retained from the prior year, and a retention of 136% means that they not only retain 100% of their clients, but also those clients started paying for more services, and that increased the net dollar retention by 36%, which is excellent for this company since it means that every client really like what JFrog is doing and how they are helping them improve their software and company every month and every year. And that confirms that the big clients did go to them for their services, which means that we should expect good revenue growth if they continue innovating as they have been doing. For the 4th quarter, they are expecting a revenue of between $40.9 million to $41.9 million and a full year revenue of between $149 to $150 million, with a non-GAAP operating income of between $12 to $13 million. Now, is it a good moment to invest in this stock, or should I wait? Well, in my opinion, they were going public with an excellent valuation when the stock price was at $44 per share. I do think it is a bit overvalued right now, and would like to see it around $50 per share in order to start a position. But you know that sometimes I like to open a teeny tiny position to track the stock, but I will not buy at current prices. I would like to see a correction, even more since the whole stock market has been booming this past months, and I expect a dip, correction, downturn, however you want to call it. In the long term, I think this company will be able to experience massive growth year over year as they continue improving and attracting new clients. Now, I'm not a financial advisor, but this is what I'm planning to do with my money with this stock. Now, with all that said, I would really like to know what you think about this company and the industry they are in. Do you think it is under or overvalued, and will you invest in it? Please let me know in the comment section below. Remember, you can get 4 free stocks with Webull when you sign up with them and deposit $100. The link for that is the first one in the description below. Thank you everyone for watching. Hope you enjoyed the video. Please smash that like button and subscribe since it really helps the channel out. Thank you and see you next time.